Hi, this is Vijay Bambwani back again, and today I'm going to talk about what form of market activity is better, long-term investments or short-term trading, and how to complement your long-term investments with short-term trading profits. As a trader, I consider trading as my religion. And like me, a few millions of traders world over consider trading to be their religion. As in religion, the difficult question here is which religion is better? Is Hinduism the best religion out there, or is it Islam? Is it Sikhism, or is it Christianity? We could go on forever without finding the answer. In trading, what we all worship, I'm sure also in investing, what we all worship is profits. We don't really care how much money we have. We just want some more. More money never harmed anyone. So, which style of market activity generates more money? The general perception is that buy and hold for long periods of time makes more amount of money. I agree that it is a very lucrative proposition. If the right stock is bought at the right time and held long enough, one can catch multi-baggers. 50 and 100 baggers have been known to be netted by patient investors out there. But is this the only way to go forward? What about guys like Larry Williams, Paul Tudor Jones, George Soros, Victor Niederhofer, amongst a whole lot of other traders who've made it really, really big? It may surprise you to know that trading has an organized and recognized championship known as the Robbins Cup. The rules of participating in this championship are very simple. The trader goes there with 10,000 US dollars of his own capital, what you want to call a float. He or she can participate in any market of his choice, go long or short. At the end of 365 days, the trader netting the biggest amount of profits is declared the Robbins Cup winner for the year. Larry Williams has set the record of taking 10,000 US dollars and taking it well past the $1 million profit mark. Now that is the kind of return that anyone would gladly give a right arm and a leg to catch. So we have seen traders making a huge amount of money. What if you were to make long-term investments into some potentially multi-bagger stocks? Does it help you to also trade for the short term? My question is, why not? Hypothetically speaking, if you were to invest money in a stock for say 5 years, in those 5 years, you would have to pay utility bills 60 times at the rate of once a month. What if trading was to generate money enough to fulfill your utility commitments, your domestic helps, salaries, and help you keep food on the table for your family? Why not have it? So you could basically follow a twin track system where your long-term investments are looking after deep alpha generation after a 5-year period, and your trading could basically fuel your day-to-day expenses plus a little more. It makes sense to always have more than one stream of income. That's what all astute investors and traders would tell you. Which is why I think complementing your long-term portfolio with some short-term trading always makes sense. There are other advantages of having a trading blueprint as well. What if you were to invest in a company's shares, let's call it ABC company. You've bought it in your core portfolio with a time frame of 5 years. Bang in the middle of your holding period, the stock decides to dive. It makes eminent sense to short sell that counter in the interim to capitalize on the opportunity presenting itself for you to make some money and keeping your core portfolio intact at the same time. So you retain your long term game plan and you've also taken advantage of an adversity which would have otherwise resulted in a notional loss. You could even use your long term investments to generate short term profits. You have option writing, which is called covered call. You could basically write deeply out of money call options on that particular stock to generate regular monthly income. You can also do stock lending, which is officially allowed in India now, and rent out your shares at the same time, keeping your long term capital gains intact as per the Income Tax Act. So, by all means, explore all kinds of revenue streams available to you, both long term and short term, so that you can maximize your returns. We are in the game of earning the maximum amount of money in the shortest possible time and with reasonable amounts of risk. That's what capital market and capitalism is all about. If you do not, you are missing out on something. This is Vijay Bambwani signing off for now till we meet again.